In this video, we will look at the piercing pattern. So this is a daily time frame chart of Netflix. So you look at these two candles, that's a piercing pattern. What are the conditions for a piercing pattern? Condition number one is that it has to come after a downtrend because it's a bullish reversal pattern. Condition number two is that the first candle should be a tall red real body. So there is no specific definition of tall or long. All you have to do is look at the other candles on the chart and relatively decide whether this candle is tall or short or long or short. Okay. Condition number three is that the second candle too should be a tall or a long green candle. Condition number four, and this is a very important condition, ideally the opening of the second candle should be below the low of the prior candle. Condition number 5 is that the close of the second candle should be above the midpoint of the real body of the first candle. So you take the real body of the first candle, you take the midpoint of that, the closing should be above that midpoint line. So when all of these conditions are met, it is called as a piercing pattern. And for a piercing pattern, the close of the piercing pattern becomes your entry point. The low of the piercing pattern becomes support. So that becomes your stop loss. So that's your risk. Next, it's a bullish reversal pattern. What does reversal mean? Reversal means after the piercing pattern, the market might either go flat or it might go up. Either of these two conditions can take place. The probability that the market will go down is very low. So people forget that there is a possibility that exists that the market might go flat. Just because you see a piercing pattern doesn't mean that the price will go up. There is a good possibility that the price might go sideways as well. So that's the piercing pattern for you. If you were to take the trade, you have to put your entry here. You have to put your stop loss here. And then your target would be somewhere here or here. In this particular case, I would not recommend a trade because the piercing pattern does not confirm prior support. Second, we don't have price confirmation. Price confirmation means if the next candle closes above the close of the piercing pattern, at least we have more confidence in taking the trade. But in this case, we don't know what is going to happen next. So you might probably want to wait for one more candle because this piercing pattern doesn't seem to be confirming any prior support. So this is a risky trade. This is a reversal trade. So there are two types of trades, reversals and continuations. Reversals are risky trades. That is why you need as many confirmations as possible. So let's look at what happens after this piercing pattern. As you can see, the price goes up. Now the problem with waiting for price confirmation is that by the time this candle closes and gives us price confirmation, the price has already rallied. So your entry point is here, your stop loss is here. So your reward to risk ratio has gone out of the window. So you cannot take the trade. So that's a trade-off. If you wait for price confirmation, your reward to risk ratio falls. And if you don't wait for price confirmation, then your risk goes up since you are taking the trade here without taking as many confirmations as you can. So that's the piercing pattern for you, which I wanted to discuss briefly. If you want to learn more about the piercing pattern and look at more and more examples, go to this link. I have uploaded the Japanese candlesticks trading mastery program. This is a world-class program which I have created for you. It has more than 1000 chart examples. Students from more than 170 countries are already enrolled in this program and they are doing it. You can have a look at the reviews as well. It's a very popular program. I think by now there must be 32,000 students on that program. So have a look at that. It has multiple levels of training. In level 1, you will find a discussion on piercing pattern. I have given 20 chart examples just on this pattern. So every pattern has got an ideal version and a variation. Okay, so in this case, ideally the opening should be below the low of the prior candle, right? However, a variation could be, let's say this shadow is tall. This is a variation of a piercing pattern. Yes, the price opens below the close of the prior candle, but it doesn't open below the low of the prior candle. So this is also a piercing pattern, but it's a variation of a piercing pattern, not an ideal version. Ideal version increases the probability that the trade will work out in favor. Variation does not increase the probability that the trade will work out in your favor, but it is still a piercing pattern. So remember, there are nuances to each candle pattern, and I have discussed that in detail in my course. So have a look at that program, it will help you a lot. It will help you read candlesticks charts better.